This is something that no other trading or investing software has. Today, I'm going to show you a new AI-powered projection tool that could change the way that you forecast, predict, and trade the markets. So the only reason that people are able to consistently make money in the markets is because of patterns that repeat. And because human behavior doesn't really change, the price leaves footprints, and those footprints of behavior leave clues. So if you could understand and recognize those patterns, you could basically be as close as possible to a crystal ball. Well, what I'm going to show you is going to take it that step further. The tool that I'm going to demonstrate for you takes the last 3 months of activity. It scans the entire history of that instrument. It then finds all of the periods that were identical and then projects the most probable outcome. It literally tells the future. If ever you wanted an edge in your trading or investing, this video is quite possibly going to be the most important video that you ever watch. So let's get stuck in. So first of all, as I said, if you study history, you can see that it makes some really predictable and repeatable patterns. If you look at all the global crashes and recessions over the last 100 years, you'll see that there's some really closely correlated patterns, not only in price movement, but the length they last, the distance between the high and the low, the time elapsed between the start of the crash and the recovery. But the thing is, it takes weeks and weeks of work to figure out all of this stuff, potentially months of research to formalize a strategy around it. Now we can do this instantly at the click of a few buttons, and I'm going to walk you through how to do that right now. Okay, so I'm going to take you through a series of examples from Forex trading to indexes to stocks, and we're going to take a look at how you can actually use this right now. So this is a feature that's been released today, and I'm fortunate enough to be a Oracle user, which means I was one of the first adopters of this tool. So I've been using it for a little while now, and it's just been a complete game changer. So the first thing I'm going to do is throw up Forecaster. I'll put the link in the description on the pinned comment so you can go and take a look at this. But what we're going to do first of all is we're going to go out to the S&P 500 index, right? Now, you'll see here, if you're not familiar with this tool, you can go and watch lots of other videos on my channel. This tool is an absolute staple tool. This is a must-have for any investor or trader who's serious about making money in the financial markets. But now we've got this tab called projection. And as you can see on the projection tab, it's got these cool little projections going forward into the future. So what this highlighted area is the past 3 months. And what this tool is going to do is now it's going to scan the entire history of this particular instrument, in this case, the S&P 500. And it's going to look for that identical pattern in a 3-month period. And it's going to show us every single scenario in history where that exact pattern has played out. Okay, because we know patterns repeat themselves. And then what it's going to do is, based on all of those historical patterns, it's going to project the average, most high probability move based on what it happened historically. So if we look below, you can see all of the identical patterns happened between these 3-month periods. So the first one here is the 1st of August 2006 to the end of October 2006. So if we go over to the chart now, I'm just going to pull up the S&P 500 on TradingView. You can see at the 1st of August, which is here, right? So we go back to the 1st of August somewhere around this area here, okay? And the end of October, which is, I think it said the 23rd of October, which is going to be here, right? Right here. You can see that it went up, dipped down, and we kind of had this nice upward trending, nice harmonic move. And if we look at the pattern there, this is what happens, right? Okay, so we're pushing up. Now, if we look at what happens next following that period, what it's saying is the most correlated event, or the average long, and you want to take a combination of both of those ideally, but it's saying that we're going to see a tiny little dip down and then a push to the upside, okay? And we're going to finish up by the end of the next 3 months, October, November, December, higher, much higher, with X return, right? So 3.68%, max rise 4.2%. So you've got all of those statistics here. So if we go and compare that now to what happened next, you can see we had that little dip down and then a 3 month. So what is it? October, November, December. We had a 3 month bull run And then we had another 3-month bull run before we took that dip down. All right. Pretty cool. That is actually insane that you're able to do that. Not only that, it's gone down to 1997, 96, 95, 2013. So when we take a look at the robust score, what the robustness is doing, it's telling us that it's got a 5 out of 5 because it's ticked all of these 5 criteria. So the first one is the most likely scenario strong? And it's got a tooltip here. It says, are there at least 2 cases, and does either the bullish or bearish case have at least a 70% probability? Well, in this case, we've got 1, 2, 3, 4, 5, 6 cases, 7 cases, 1 bearish, but we've got 1, 2, 3, 4, 5, 6 bullish cases. So that's an enormous percentage, a high strike rate of way above 70% probability. Okay. Now, in fact, we've got 86% probability. Is the projected move significant? In other words, are there at least 2 cases, and do at least 70% of the outcomes in the dominant scenario end outside of the range of the original pattern? And what that means is when you look at the most correlated event and the average long, you can see that they both correlated. They both dip down, then move up, and they both end up outside of this regular pattern. So they're much higher. They finish higher. Okay, which is a great indication. The next thing is the best historical match aligned? Does the top historical case go in the same direction up or down as the most probable scenario? The answer is yes. Are the paths internally consistent? Meaning, are there at least 2 cases, and do at least 70% of the dominant outcomes follow the same price path, e.g. high first, then low, or vice versa? So both of the dominants do exactly the same thing in this case. And then finally, does the best match follow the same path? And the answer is yes in this case. You can also look at the single events, okay, and you can see every single event that's down here plotted on the graph. And if all of those end up higher, that's a really great indication, gives you a lot of confidence. But let's take a look at a different scenario. Let's take a look at a Forex pair. And for those of you who are traders, this time we'll look at a short. Okay, so look, the top of the scoreboard, Aussie dollar. We're going to take a look at the Aussie dollar. All right, so I'm going to bring the Aussie dollar out. We're looking at the projection, 3 months. You can see down here that we've got a couple of cases, one in 1999. So there's 3 cases, one in 96, one in 99, and one in 2014. And this one, very, very strong. 5 out of 5, 100% short. Okay, now that's great. That's a great starting point. And obviously you can see the single events here as well. So let's go back out onto the chart and take a look at one of these, right? So 1999, here we go, or 2014. Let's take a look at that one. So we can go out to 2014, long time ago now. And we're saying that the date is 14th of May. Let's take a look at that, 14th of May. So we're going to look at the 14th of May 2014, right, which is here somewhere. Okay, so let's just draw that in. This is the 14th of May somewhere here, right? And you can see we had this little push up and then a massive short for about, well, for 3 or 4 months actually. And if we look at what happened here, you can see, oh, by the way, as that was happening, see how sideways correlated it was? Okay, and you can see that here, sideways correlated, it was pushing up slightly. And then we had this little push up and then a massive drop down. Okay, and again, all of the robustness on point, the probability, you can see a little analysis of the probability there as well. And this looks great. Okay, so how can we get even more confidence on this? Well, you could go to the seasonality, right? So you can go to the seasonality and you can see that we had this push up and then a big bearish move down. Okay, so if you was to draw this out on the seasonality here, if you was looking to trade this, imagine if you was looking around this zone here, right? And you're looking to short this, here we go. 70% correlation, 70% correlation, right? We're looking for shorts, good returns there. You can see that it's predominantly short, right? All the way through August, September, October. These are the short months. And this is comparing multiple seasonality over the last 5 years and over the last 7 years and comparing that correlation in the behavior of price. And when you compare that with the projection, which now is basically looking at what's happened in the last 3 months and finding those exact patterns in history and then projecting forward what's likely to happen next based on the average of those projections, this is phenomenal. Like, please don't underestimate this, okay? It is absolutely phenomenal. And all of this has taken me a few minutes to analyze, not weeks, not months, absolutely crazy. So those of you who are traders or investors, you can now use this. Obviously, you might be familiar with the quantum screener already. If you go to the quantum screener, you've now got the projection tab as well, which you can use to look at those projections, and it will give you all of the probabilities here as well. So if you wanted to look at Forex or the S&P 500, different sectors, you can go in and pick your trades like this. And then you can just go out to, say, the pound yen. You guys know I've been talking about a long position for the pound yen for many, many months because this has just been a big bullish run. But look at this, right? So it's projecting a massive run on the pound yen. Based on the previous 3 months, we've got 3 historical events that were identical to this particular price pattern. So therefore, it's been able to project forward this particular pattern 100%. 100% long. 5 out of 5 robustness. We can now go over to that chart, look at the pound yen, and what do you know? We can start looking at entries to the upside. And I've been bullish this pair for the longest time because I'm looking at a move up to these previous highs next, which, wouldn't you know it, that might just be a 3-month run. So for me personally, if we can get a break and close above this high, I'll be looking to trade this right up to 207.90, 208 flat, just under that 208 flat level. And that is an active trade that I'll be looking to place next week. So as I said, this tool is out now. I highly recommend you go and play around with it. This is going to be a game changer. You know, this is going to put you way ahead of 99% of retail investors, retail traders, because you've got such an edge. All trading is pattern recognition and then discipline to stick to a consistent plan. If this is doing your pattern recognition for you, all you need is a consistent set of rules to go in, pick the best setups, and you're away. So I hope that's helped. If you want more videos on detail on how I'm going to be using this, let me know in the comments. Just type in projection and I'll do more videos on my own personal analysis using this tool. But go and grab a copy of Forecaster. I'll put the link in the description and in the pinned comment. Until next time, go and have fun with this, and I'll see you in the next one.